What's going on, guys? Welcome back to the channel. If this is your first time here, my name is Vince and I post on this channel every single week about the stock market, about options trading, and about stock trading, pretty much anything about investing. So if you guys are into that kind of stuff, then make sure to go ahead and subscribe to the channel. Now, if you guys were watching the market today and watching the close, you saw that it was a pretty ugly close. The SPY, the SPY, ended right around that $300 level. Now, that $300 level is definitely an important technical level that we have to watch to see what will happen next. Now, unfortunately, it is Friday, meaning that we have a weekend to wait to see what happens and see how Monday opens up. There's a few things that are working for the market and some that are working against the market right now. There's definitely that virus coming back. I live in Florida where it's getting bad again. So there's a few things that you guys should keep in mind. So in today's video, I'm going to go over some of the things that are going good, some of the things that might drag the market down, so that you guys have a good overall idea of what to expect for this coming week. Alright guys, so how we're going to structure today's video is first we're going to go over the fundamental and economic news that you need to keep in mind for both the bullish and bearish case, and then we're going to dive into the technicals and look at some important levels. So number one for the bears is that the COVID-19 is coming back. We all know this. Florida is getting bad. They said that today that bars have to stop selling alcohol, which is definitely going to hurt all of those small businesses and possibly put some of them out of business. So we're starting to see that lockdown again, which is bad for the economy, bad for some small businesses, maybe not so much for the overall large economy, but definitely going to sort of pile up and start to hurt us. Now, we also have to pay attention to flu season, which is in October. There's a possibility that it gets bad again there. So that's the first thing you need to keep an eye out for. It definitely has a weight on the market. That headline risk is in there for the virus, something to definitely note. Now, the second thing is that buying is becoming less enticing for both retail and institutional traders. When I purchased, back in April, it was definitely not as high as it was today. We've been on an extremely sharp bullish run. There's not as much incentive to buy at these levels. We're at an uneasy state where some stocks are near their highs, some stocks are maybe slightly off their highs or above their highs. So we're really not getting much of a discount right now. So buying is probably going to dry up here until we get maybe some type of downturn where it starts to get enticing again. That's the second thing to keep in mind for a potential downturn. Now, it's not all so negative. There's definitely some things that are going for the market. Number one is the Powell pump. There's the Fed saying that they'll put trillions and billions of dollars into the market, which will potentially hold it up. So we need to know that you don't want to always fight the Fed. You can't fight the Fed. You don't have enough money to fight the Fed. So know that, there's a tendency for the stock market to go up. If we get small dips, if they're bought up by the Fed, if corporate bonds are bought up, if institutional traders jump back in, maybe we'll see a rebound. So that's the first thing that's great for the bulls. Now, the second thing is that I don't think we'll be getting back into the type of lockdown that we were before that got us down to the really lows back in April and March. The president has said and some governors have said, we're not going to get back to that point. It was very detrimental for the economy, and they don't see a reason to get back to there. If the mortality rate of the virus stays flat with the cases increasing, then we know that, it's not a deadly virus. It's something that we can withstand and withhold, and we don't need to lock down the economy again. So that's another thing that's very bullish for the market. So if I was to put my 2 cents on this whole situation, now first off, I'm not a financial advisor, so don't take any of this advice as financial advice. It's all for entertainment purposes only. But, if you have a long-term portfolio, if you have stocks long, don't make any rash decisions. Don't go ahead and try to sell everything here, try to think that this is the top and get rid of all your stocks. If you're a consistent investor that will continue to invest into the stock market, continue to add to your portfolio. If we start to drop, start to average down on some stocks. If you're still up on stocks and you don't feel like averaging down just yet, maybe give it some time to fall out a little bit. But I definitely think that a pullback is healthy from this point. We are pretty much at all-time highs, almost across all the indices. And, do we deserve to be there? Maybe, maybe not. Things have been bad in the economy. It's not as good as it was before this whole virus. And maybe we're just a little bit inflated right now. So if we have a healthy downturn, which I think is possible, don't take it as the end of the world that we're going to go back to the lows. Start to invest at some lower points, start to average in. If you're not in a long-term portfolio, maybe this is your opportunity to get in further down than the highs. So keep a level head out there. don't trade off emotion. Just sort of look at it, know everything that's going on, take these fundamental and economic news that's going on, take it into consideration, and start to make your own thesis. All right, guys, so now that we've sort of cleared up some of those economic and fundamental things to keep an eye out for, let's go ahead, dive into the charts, look at some key levels on the SPY, some support and resistance points, and maybe where, if we do retrace, where we can retrace to and try to find some support. All right, guys, so I've got the charts pulled up here. We're going to go ahead and look at the SPY, and we're going to look at the daily chart. So pulling it up here we have it, big downturn, big bounce, and here we are right now. So first thing we're going to look at is the $300 level, which is right here, which is right where we're sitting. So $300 level, respected it here, and also respected it back here as well, back in July, August, September time. So if I draw that $300 level, we can see that maybe we bounce off it here. Definitely something to keep an eye out for. Now the next thing that's good for the bulls, if we want to see a rebound, is if you draw some Fibonacci retracements and you draw it from the bottom up to the top, you can see that we're basically sitting right at the 23.6 retracement level, which is right around $300 per share. So that's another bullish, maybe a little bit of support there off that Fibonacci. If we break down to that, maybe we go to the 38.2 or the 50. We'll have to keep an eye out for it, but that's definitely bullish that we're sitting at that support level. Now the next thing that I see that is still bullish is that we are in an upward trending channel still. So drawing the channel from the low, maybe across these lows to the highs here, we can see that, you can draw this a bunch of different ways. You can draw it more this way if you wanted, to hit this low, but I like to draw it there. There's two good lows right here. So it still is upward trending. Now, if you look at it closely, you can see that right here, we did sort of break through that channel, but you don't want to respect these channels 100%. Sometimes they'll break it, bounce right through it. So don't take this trade right here thinking, okay, that's it. We're going to go down to maybe 280, 290. Be careful before you jump in. Maybe try to get some more confirmation. Definitely something to look at. Now, the final thing that I see that's more of a bullish case is the bullish flag that's forming here on the daily chart. So if you draw this flag, you can draw the bottom of the flag right here at 300, top of the flag right here, coming down on these downtrend, and then you can draw the flagpole to make it look pretty. But right there, bullish flag. Sometimes what stocks will do is they'll break out of that flag right here and move higher. So another thing to keep an eye out for the bulls. Now, if we switch over to some bearish things that I see, first was that that break of that channel that we saw. The next thing is that if this 300 point breaks, which it probably will, or maybe will, I don't know, we'll see. But it sort of falls pretty quickly. In the past, you can see that we went straight down to 290 from that point. And if this 300 point breaks with some bad news in the market, I don't think we're going to find much support here. Maybe we find it here at these previous levels around 292, 290. So maybe we got to watch that, see what happens. Next thing is if that does break, what you don't want to see if you're a bull is you don't want to see it break, maybe go to 292, 290. Try to come back and hit this and fail and turn this support level into resistance. And what stocks will most likely do is they'll stair step back down even lower than this low right here. So we don't want to see this if you're a bull. If you're a bear, what I would do is I'd wait for this break and I'd wait for this retest. What people like to do is they don't take the first trade, but they wait for this retest right here and see if we fail. Now we did this exact thing over here. So you can see if you watch these daily candles, we drop down right past support here. We come back into it, we fail that support and it turns into resistance and we drop down lower. So, if we mimic this over here, that's exactly what it would look like. We drop down, maybe hit 290, try to retrace back to 300, ultimately fail at 300 and fall lower. So there's some bullish and bearish technicals that I'm looking at here on the daily chart for the SPY. Take it for what it is, guys. Do your own technical analysis. If you guys are seeing anything that I'm not seeing, let me know down in the comments. I'd love to see it. But so far, I definitely think that this 300 level has to hold for us to continue this uptrend on the SPY. All right, guys, I hope you enjoyed that quick technical analysis on the SPY, as well as some of the fundamental and economic things you have to look out for this upcoming week. This weekend will be interesting. I'm sure we'll see some news about the COVID. I'm sure we'll see some news from Trump and Powell trying to pump up the market. So we'll have to see Monday how it all turns out. If you guys are interested in joining my Discord chat, it'll be the first link in the description. I actually have it open right there, talking to some of the members as we speak. There's 600 members in there. We talk most of the day about stocks, about options. I post all of my positions. they post when they take trades. Overall, just a great way to have more eyes on the market. So if you guys are interested, make sure to join. Now guys, if you enjoyed today's video, make sure to smash that like button. Make sure to subscribe to stick around for some future videos. Let me know what you guys think about the new mic setup. I think it sounds a lot better. When I was doing that technical analysis, I think it sounded a little echoey, so I'm still working out some kinks, but just trying to continuously improve for you guys out there. So I hope you guys have a great rest of your weekend, and I hope to see you in the next video. Peace.